Hey everyone, welcome to the KE Report in a daily editorial here on Thursday, June 26th, chatting with Joel Elconin. Joel is the co-host of the Pre-Market Prep Show. Check out the Pre-Market Prep website as well as the Stock Trader Network that Joel just launched fairly recently with a couple partners. Joel, let's talk markets because look, the markets are still telling us that things are going pretty well. The S&P close to all-time highs. There's a lot of opportunities out there even in the commodities sectors. We have copper back above $5. We also had that crazy volatility with oil that we'll get your comments on. Overall, again, still seem to be a lot of opportunities out there, a lot of markets moving higher in the face of still geopolitical turmoil, but that turmoil, boy, oh boy, it's on and off, day after day, week after week. But one thing we were talking about before we started recording is simply you made a comment saying these are just generally crazy markets. I'd like you to explain that. You've been in the markets for a long time. What do you find so crazy about these markets right now?
Well, good afternoon, gentlemen. Thanks for having me. I mean, it's just a Goldilocks market. I mean, if U.S. bombing Iran takes place, geopolitical concerns, Russia, Ukraine, are far from being resolved, the Middle East situation. I mean, for the market to rally in the face of all that, I mean, it just goes against everything in textbooks, that you learned about the markets. And there's just a bid underneath the market from underinvested funds, institutions, and individuals that just are out there relentlessly, buying the dip. If you look at where you're at, from those April lows, and I can say that, if you guys have been listening to me consistently on your show, I thought when the market got back up to 5,800, 5,900, I thought it was just looked at a gift horse in the mouth. You recoup all those losses from April. But again, the market consolidates, stays still, shrugs off a war, and here you are, S&P index approaching all-time high.
Well, and Joel, in addition to shrugging off the geopolitics, whether it's the Ukraine-Russia situation or Israel-Iran, there's also been all the Fed, rumbling and the division amongst itself about whether they should cut or not to cut. There's been economic data coming in on inflation, on jobs, on everything else. It seems like it's been a big nothing burger almost across the board because the market just wants to go up. I'm just curious, since we're approaching the end of not just the month, but the end of the quarter, there's a lot of options that roll over. There's options contracts that roll over. We just had the quad witch, but there's a lot of people that reposition for the second half of the year. Do you think that's factoring into just maybe this next wave of market jubilation?
Yeah, well, you have the quad witch expiration last Friday. We often talk about that is either a sharp reversal of the current trend or a continuation, right? Monday morning things were looking pretty bleak, a lower open, but boy, cleared that, and it's an update, a little bit of a pause in the action yesterday, but there's not a negative catalyst out there right now. If a war cannot, US being involved in a war is not a negative catalyst, then I find it hard to find any negative catalyst out there.
Well, that's the thing, Joel, is that a lot of people, right, are saying, well, is the Fed going to do something? The Fed keeps saying, as of right now, they're more or less holding, still waiting for, I think, any significant changes in the data. And it depends who you talk to when you look at the data and get their opinion, what direction it's going. Because look, there are small changes in what we're seeing to inflation, to the job numbers, and to some of the economic data. But overall, to me, everything is kind of boring when it comes to the economic numbers. And that's why I think a lot of traders and even the Fed are saying, we're waiting for something bigger to happen to truly adjust our positioning. Is that what you've been seeing in the data then, too? Is that it is kind of boring right now? You can try to take a side, but quite frankly, it's a lot of range bound kind of data.
Yeah, the inflation data, came in okay. The unemployment data is coming okay. I mean, just on the surface, when you go out for lunch or you go out for breakfast, it sure seems like you're paying a hell of a lot more money. So there seems to be the inflation under the hood. and affecting, different consumers in different ways. The upper end consumer, they're shrugging it off. We just don't know the appetite for how the lower and middle end consumer is doing, with the rising cost. The tariffs is still a big unknown, and some of the companies say they're, willing to absorb some of the tariffs to preserve market share. But you mentioned the commodities, going higher, and that could signal an inflationary period, or it could say, hey man, there's demand, there's things going on. We need copper to to put up these buildings and new houses and stuff. So be careful for what you wish for as far as the commodity prices go. But with the one big component being the oil market, and that just having that temporary spike and then coming back down, there's a lot of equal forces going on. Of course, you have the administration, cut rates immediately, and you have a very cautious Fed that has navigated through some unbelievable times here, going back to COVID. I think I've mentioned this before. They were poised to maybe start, taking rates up a little bit in pre-COVID, but they had no choice with, what was going on in the world economy. So, until we get a crazy high inflation number or a huge spike in unemployment, then the path of least resistance for the market is higher.
Well, and in some of that small data that we were talking about, inflation has ticked up very mildly, but it's really just hanging out in the range. And unemployment has ticked up just a little bit, but nothing that's very concerning. But when you bring up the commodities, they have had a steady trek higher recently. And, it's not just that oil spiked up because of the geopolitics, although that was a factor. When we talked at the intro that copper is over $5, Dr. Copper is supposed to be the economic diagnosis of the economy and what the health of the economy is, and that would give you an indication that things are pretty rosy. But if it was just copper alone, you'd still have to question it. But you're seeing platinum breaking up to highs it hasn't been at for a decade. You're seeing aluminum and zinc blasting higher, and those are just metals that are used in everyday life. Even silver has gotten a bid recently where it doesn't really make sense for it unless you believe that there's a stronger economy and need for more electronics. So could these higher commodity prices, Joel, be telling us that maybe the second half of this year there's more growth on tap than people were
Yeah,
anticipating?
yeah. And, if there's growth, if there's, increased spending, then inflation is not a bigger factor. When you get into problems is with you have the inflation, and then you start having, a declining economy. The nasty word, stagflation comes to mind. But right now, it's just not prevalent. It's just everything, every bit of news that's coming out is just being interpreted, well, commodity prices going higher. That means there's more demand. Demand is good. It's being consumed. There's not an oversupply. Then here you go. You have the scenario where you're in, where these prices are rising, but they're being absorbed. They're being absorbed by the demand.
Joel, how are you seeing the US dollar play into this too? Because as rosy as the market's looking, everything, the dollar has been, in a way, kind of crashing this year. The dollar is already down over 10% on the dollar index. So that's showing strength in Europe because of the weighting of the dollar index. But we haven't seen this kind of move in the dollar in a long time, a 10% move in less than a year. So how much could that also be playing into commodity moves? And what could that also be saying, kind of flying in the face of this rosy picture for the US?
Well, I mean, a weaker dollar, right? What does that mean for inflation? Well, it makes US exports more competitive overseas, right? So your exports are getting a boost from this. It makes it more attractive, for visitors, to visit the US, right? The strong buck. But, it potentially lifts inflation, because of the imports paying more for higher prices. But I mean, if we're just exporting, and profits are being made, then perhaps right now the market is interpreting that to be more important than, more that we're paying for imports. Just selling abroad, helping these multinational companies, weakening dollar. I don't know about the travel situation, with what's going on in the Middle East and everything. But you got two goods and one bad. And right now, the two goods, seem to be overshadowing the bad. I mean, the market did rally with the strong dollar when, it's a steady dollar is more important. The threat of lower interest rates is probably hurting things. I think, we survived. I think, one thing that got Trump's attention, was when the bond market really heated up. And, a lot of people, a lot of foreigners own a lot of our debt. And that really was a pivot, when the bond market was talking to them. So TLT got back down to that, historically support level, 84, 85, bounced again, didn't really get out of there. So that, that's holding steady. But, the market seems to win with a strong dollar or a weak dollar. Right now, it's really winning with the weak dollar.
Yeah, the weak dollar is both a tailwind for the commodities and the general markets. And like you say, it helps exports. Trump wanted a weaker dollar, and so there you have it. But another big factor people are talking about, Joel, want to get you to weigh in on this. I've had a couple comments on the show and even some articles I've read that talk about this big tax cut spending bill they're trying to pass. That if it passes, the idea being that if people can keep more of their money and pay less in taxes, that extra money is going to roll into the markets. And a lot of people think we're going to see a big influx of new investment or capital coming in off the sidelines if that bill is passed. Any thoughts on that?
I get off again, good for some sectors, bad for others. But, with the job cuts that have been going on, with the, trimming down of the government, there has to be, a replacement, right? Putting more money in the consumers' pockets or people that didn't lose their jobs. I think, unfortunately, it's the tax breaks are probably not going to help the people that really need them as much. They're probably going to be more on the, for the higher end. But yeah, I mean, if you don't have lower interest rates then as a stimulus, then certainly lowering, taxes could be a hidden stimulus as well.
So, Joel, in this environment where it does seem like everyone's sitting around waiting for something to happen, and that something just hasn't happened yet, keeps getting pushed off. We do have the odd shock to the system, mostly geopolitically, but that does seem to get rectified or ignored pretty quickly. What's coming? What do you have your eye on that could upset this Goldilocks market, as you say?
Well, I would say they have to come out of the Middle East, come out of China. At this point, China tried to keep a middle ground between, they're condemning the U.S. actions. But I mean, unless a China invasion of Taiwan, which people have worried about for a long time, escalation of the war in Ukraine. I don't know how much more it can get escalated, but I think it would have to come from something overseas. And the other thing too, I mean, I don't think Iran is gonna, take this entire situation being bombed by the US sitting down. And, what they're planning, no one knows when they're planning it, no one knows. So, until that situation, hits the United States, then people are, like I said, the path of least resistance is higher.
Well, Joel, before we get you out of here, I can't let you do that without putting on your technical hat for us and looking at it big picture, because the great thing about technical analysis is it scrubs away all the geopolitical and macroeconomic noise and just look at the numbers. When we look at the numbers of the S&P 500, I'm looking at the futures, which is up at 61.42 right now, but you said you like looking at the cash at the end of a quarter, at the end of a month, just because there's less noise in it. What are you seeing when you look at the technicals? Because whatever the reason is, the markets are near all-time highs and close to a breakout. Where is support and resistance?
Haha, well, there is no resistance, Shaq. Come on now. But yeah, just a real quick explanation. The rolling front month contract of the S&P 500 futures tells a little bit different of a story. The rolling front month contract right now, you have the all-time high coming in. It was actually a triple top on the monthlies, a little bit higher than this at the 2270 area. So that's a good 60, 70 points away. But what the futures, the mechanism of the futures is, it is pricing the September contract was in February. So you have to factor in the time value of money over that period. Just to give you an example, to illustrate this better, if you look at the December contract in the S&P 500 futures, you don't have the all-time high until 63.41. So you have the factor of money. The S&P cash that I'm quoting here, only the SPY pays that dividend on quarterly expirations. Of course, the cash compensates for that. So strictly being a cash guy and taking a look at the SPX, the all-time high was made just a few months ago in February at 61.47.13, and we are currently trading at 61.41.17. So if that's your target, that's your target. Taking targets is a good thing. But right now, there's not much you can do. I mean, Fibonacci extensions or average daily ranges to complement things. But right now, just keep a high on the cash index. That all-time high was, as I said, 61.47.43. And if you're more of a closing basis kind of guy, like I am, the all-time closing high in the cash was 61.44.15. So as far as support is where my sell stops go off to get me short. That's where support is.
All right, there you go, Joe. Hey, right now, these markets are doing just fine, and it's markets broadly, internationally, that are also doing fine. Commodities are doing well. A lot of sectors within the markets that are doing well. So right now, things are pretty good. We are entering into summer. Maybe it will be a nice, boring summer with an upward bias, but again, who knows what could come out of left field, especially geopolitically, that could upset these markets. But right now, even data-wise, things are relatively fine. Joel, great chatting with you again. Joel Elconin, co-host of the Pre-Market Prep Show. Click the links in the show notes to listen to Joel's comments every day and consider joining that Stock Trader Network if you're an active trader. Joel, have a great rest of your week.
Okay, thank you, gentlemen. Great time as always.